In this video, I'm going to show you how to purchase Treasury bills step by step. T-bills are an amazing investment right now because they're paying out high interest rates. If you have cash that you want to invest in the short term, T-bills may be the investment strategy that you are looking for. So, what are Treasury bills? Treasury bills, also known as T-bills, are short-term debt securities. They're backed by the government, which means they're low-risk investments. Right now, the minimum investment amount is $100 if you purchase through Treasury Direct, or $1,000 if you purchase through a brokerage firm such as Vanguard or Fidelity. The terms for T-bills range from 4 weeks to 1 year, and they're issued every week. These are essentially the lockup periods. So as you can see on the slideshow, 4 and 8 week T-bills are issued on Tuesdays and auctioned on Thursdays. 17-week T-bills are issued on Tuesdays and auctioned on Wednesdays. 13 and 26-week T-bills are issued on Thursdays and auctioned the following Monday. And 52-week T-bills are issued every 4 weeks on a Thursday and then auctioned the following Tuesday. So as you can see, there are a lot of opportunities to purchase T-bills. You can find all of the auction dates on the Treasury Direct website. I'll link that below if you're interested. So basically it just shows the security type, announcement date, auction date, and settlement date. So you can scroll through this and decide which T-bill you want to purchase. It's also important to note that you must purchase the T-bill before the auction date. So you're probably wondering how T-bills work. When you purchase a T-bill, you're basically loaning money to the government. The government will pay you back with interest at the end of the maturity term. T-bills have a face value, so you buy the T-bills at a discount rate, and when the T-bill matures, you get the investment back plus the discount amount as your return. When you place an order, you're placing a non-competitive bid, which basically means that you don't know how much you will be paying or how much interest you will earn. The discounted price is determined at the auction date through a competitive bidding process through the banks and other institutions. So basically, we get whatever price the big guys decide on. However, you can get a feeling for the pricing by going to this page here. I'll also link this below. This shows all of the recent auction results. So you can see for the 13-week, it was 5.378, and for the 26-week, it was 5.483. If you're liking this video, please hit on the subscribe button. So, you're probably wondering how to calculate the ROI for T-bills. When you purchase a T-bill, you're purchasing at a discount rate from the face value. So, for example, if you purchased a $10,000 T-bill with a discount rate of 5% and maturity of 52 weeks, you would pay $9,500. After 1 year, the government will pay you back the $9,500 plus $500 to make it $10,000. It's also important to note that you only get what you lent the government plus the interest when the bill matures. For example, if you purchased a 4-week T-bill, then you'll get what you lent the government plus the interest after 4 weeks. If you purchase a 52-week T-bill, then you'll get what you lent the government plus the interest after 52 weeks. It's also important to note that the standard interest rate is an annual rate regardless of the term length. So, for example, the most recent 4-week T-bill had a rate of 5.31. So you go 5.31 divided by 365 equals 0.0145%. You then take that 0.0145% and times that by 28 days to get 0.4073%. So if you purchased a $100 4-week T-bill, you would have earned 40 cents. Or if you purchased a $1,000 4-week T-bill, you would have earned $4.07. T-bills are certainly a hot topic right now. So what are the advantages of T-bills? Well, they're almost zero risk because they're guaranteed by the federal government. We say zero risk because every now and again, Congress does threaten to shut down the government and stop paying its debt. Another big one is that T-bills are exempt from state and local income taxes. However, they are subject to federal income taxes. They are also highly liquid and can be bought and sold on the market. and there's low minimum investment requirements, which makes it easily accessible to many individual investors. So as I said before, it's $100 on Treasury Direct or $1,000 through your brokerage firm. So while T-bills are an incredible investment right now, there are some disadvantages. T-bills are purchased via bidding through an auction process, so you may not get the results that you want. There's also the opportunity cost of not investing in other asset classes such as stocks. Now, if you're interested in learning more about other short-term investments, check out our video here. You can purchase T-bills through Treasury Direct or through a brokerage firm such as Vanguard or Fidelity. The interest rate will be the same through each institution. If you purchase through Treasury Direct, then you can purchase a smaller amount of $100 compared to a brokerage firm where the minimum purchase is $1,000. I personally prefer to purchase my T-bills through my brokerage firm because I like to have everything in one place. However, it really just comes down to personal preference. Now I'm going to show you how to purchase T-bills on Treasury Direct. Once you're logged into your Treasury Direct account, come up to Buy Direct, click on it, and then click on Bills. Come down and click Select. Okay, and once you've selected that, you'll come through to this page where it shows you the various T-bills, the auction dates, and the issue dates. So you can scroll down and choose whichever one you want. And then at the very bottom, you'll be able to put in the amount you want. So for instance, $100. Once you've decided how many T-bills you want to purchase, you can then select where you want that money to come from, whether you want to reinvest it, and then the bank account that you want that money to be sent to once the T-bill matures. And then click Submit. So I'm going to show you how to purchase T-bills in Vanguard. Once you've logged into your brokerage account, come down to Transact, and then scroll down to Trade Bonds or CDs. Okay, so I selected the 1 to 3 month T-bills, and then it brought me through to this page where you can see various T-bills with various yields and maturity dates. So you can select whichever one suits you depending on the yield that you want or when you need the money. So I'm going to select the first one, so push continue, and then you can select how many you want. So I'm just going to purchase $1,000, and here it shows the total that I'm going to pay. So I'm going to pay $984.20, and then on the maturity date, I will get the face value of $1,000. Push continue. Then once again, this is just confirming that everything is correct, and then I click Submit Purchase, and it's as easy as that. Now, if you want to be a savvy T-bill investor and spread your money across several T-bills with different maturity dates, then you may want to build a T-bill ladder. I personally built a T-bill ladder for myself and my husband a couple of months ago. If you're interested in learning how to build a T-bill ladder, please click here. So, are T-bills good investments? Yes, they're great investments right now. They're low risk, backed by the government, and they don't have any local or state taxes. If you have any other questions about T-bills, please leave them in the comment section below.